Don't forget to get my free training underneath this video. Like, share, comment and subscribe. So pound dollar is an interesting FX pair to be trading. I did do a longer term analysis on this before. At this point, really what we're looking at is trading the near term on the retracement from this push up. So if we just start off by acknowledging you've gone from 2008 all the way down, okay, down and down and down and down and down. In the financial crisis, right in the midst of it, you had your largest fall as people bought US dollars, they sold their Great British pounds. Since then, the trajectory has been down, and even before that, for a significant period of time, especially in previous crashes, you've gone down anyway. So more or less, the very, very, very long-term trajectory, if you're someone who's really looking at long-term positions on this, is down. And you can see that clearly in this sense, okay? You've just come right down, down and down and down and down for a long period of time. Now, the bottom side, where you've bounced from, you can see is once over here in 85 when you really had a crash, and again down here. Now, what is so significant about this, and what I really like about trading, and many of you who follow me will know this very, very well. If you're in my trading academy and you're a paid member, you'll also know this very well. We love going off what is probable, and we love understanding what is market value, okay? Now, market value is a term I use all the time. And essentially what it refers to is where you're getting a good deal, a good bargain. Because if you're not trading, that's what everyone tries to do, don't they? They really ideally want to buy things at the lowest price. Everyone goes out, and if they're buying a new car, a new house, doesn't matter what it is, they're going to be looking for a better deal, aren't they? They're going to be looking for a reason to buy it. Now, normally the reason for you buying anything is based on the price at the time. And you can see that if I draw a little horizontal line here, that on your left-hand side is the lowest price you can see over this period of time since 1970. So for 50 years plus, that is the lowest point you get. So therefore, that is your low price. That is what is a low price. That's a factual point, okay? And it's interesting as well because within my academy, we like to trade based on facts. That is a non-negotiable low price. So when the price comes back, not only have you seen it bounce away from that point before, but you are also very aware that last time it bounced away, it flew up. And you're also aware that that also must be a low price. And this is how we're solving the puzzle of where the market is going to turn. We're doing it based on probability, and probability can be seen based on market value. And that's how it all comes hand in hand. So the fact that this is a low price is simply why you would expect investors to get long. Now, the larger money, the mass money in the market, the people who sit there in the big towers, or professional traders like myself, will look at these areas and say, okay, yeah, I want to make a deal there because I know it's the lowest price for almost 40 years. 1985 to 2022, okay? So that is what market value is, and that's why you see a bounce from that point. Being a trader is all about identifying where, in the grand scheme of things, it is wise to enter long and enter short, again, which is purely based on market value. So that's why you had your bounce from there. And what is really common as well is the market maker stop. Now, some of you don't know what that means, I'm sure, but essentially all it entails is the fact that if you look at the candle wick here, right in line with my mouse, and the low of 103.565, you'll notice that it beats the low that we saw previously, okay? The reason why it does that is because the orders that go into the market here are so large that it's better to take them slightly lower than the previous low. Because when they enter, it then moves the market so much that they get a worse deal. So that is why you often get prices dip under previous lows. Nonetheless, if you're long at that low, you're still attaining market value. But the low previously came at 105.678, and then you got to 103.2, okay, in a big rejection. And it's worth noting in that same month, you went back to 110 from 102. Okay, so an enormous rejection upwards. And again, it's because people who make money in the markets look at those prices, they say, wow, that's a low price, I'd love to get long there. And then when you return, they do, because they know the probability, not only the probability, but the fact that they've got a good price, it makes the chances of them making money higher, okay? Because the lower you buy, the better deal you're getting, right? So that is why that was a long zone. Now, since you bounce off it, okay, which by the way you had here in a similar fashion, and there, you can see every time the market just continues to fall because the pound is losing value. Now, the current bounce where you are now, okay, looks weak as well. It doesn't have that much impetus. Now, you may find today with the Bank of England that that changes, possibly. But at this point, all you can infer is that it's a sideways market. And it's because the market doesn't know where to go. Now, I did call it long earlier, and I would say if you had it long on this daily candle, I would just exit it. I mean, it was a risk trade. Well, not exact. It wouldn't have had massive risk because your size would have been small. But my point is, it's not the best time to get long. I mean, you do have the probability in your favor. That is market value. But you also notice that your time that you've got till you hit the upside is very, very tight. There's very early resistance, in other words. And with that, there's no strength. No one, it doesn't really look like people are rushing in to buy pounds. Okay. Which is why, if you go on something like your 4 hour, you're slowly crumbling down. So that's why it was a bit more risky to buy. Nonetheless, your size should have been small anyway. But I would be out of this now, and I would be hands off the pound dollar, especially for the Bank of England news. If you're one of those people who follows me a lot and you're sitting thinking, you know what, I'm going to guess what the news is going to do, please don't do that. Okay, please don't, because it's so dangerous. If you guess what the news is going to do, you'll get burned. Okay, if you've got no trading plans and you're sitting there trading your capital thinking you're going to be rich off $1,000, okay, it's just going to happen. So be very careful. Mm. And yeah, that is my bias. So I wouldn't enter at the moment. You could take light scalp shorts at early resistance, like I mentioned. You might want it slightly higher than it is, maybe 1224. But really, I would rather a significant move to the downside via that Bank of England news, perhaps, or a significant move to the upside via the same news. The earliest place I would probably short would be about 1232. Okay, and the earliest place I would buy would be under these previous lows. I don't think you've got much weight in these at all. And I think you may come under them getting to key price action levels down here. Okay, so that is really where I'm looking. You know, if you get something like that, it'd be ideal, or get something up here. If it goes higher, I would just scale in via DCA further. Here, all right. So just be very careful with that, and trade the pound dollar small, especially with the news. Like I said, it's likely that they're going to keep the rate unchanged. If there is a surprise, I'd say it's quite unlikely, but if there is a surprise, you may find things move a lot, because the UK economy at the moment is very, very, very rocky. There isn't a lot of clear direction, and you just have to be careful with it. In regards to the FTSE, someone's asked for it. I'm short on the FTSE, in line with my risk plans. Again, like I was saying earlier, if you don't have them, I would suggest getting on board, especially at times like this. You'll be able to manage your risk so much easier. Okay. If you're looking at a market like this and it's going sideways, and you say, you know what, I'm going to short micro or a mini lot. Okay, let's say I'm going to short 2 mini lots, or 20 micro lots, 0.20. Why you have to have a justification for that? That is large size, probably for a lot of people. Um, Clearly, that's not applicable to this situation, because the probability is not the same at this point as it would be if you rose higher. Just like if you fell down here, would a light size really fit that? You know, you have to ask. So that's a full rundown of the pound dollar. That's a very important chart for most. I'm going to do the pound AUD and the pound New Zealand next. Don't forget to get my free training underneath, of course.